Hey, good morning, everybody. Welcome to another day on Mark Board brought to you by Mike Bjork. Today's Hump Day, Wednesday, August 6th. Just one real minor economic news today. We got the trade deficit for the month of June. Back in May, we had a 44 negative, obviously, deficit, 44.7 billion. Forecast supposed to increase to 45, and it actually decreased to 41.5 billion. So it pulled back, which is obviously a good sign for us. But in terms of affecting the overall market, this is minor news. But it's obviously just something kind of nice to keep tabs on how far back. And a lot of this is due to a decrease in our import of oil is what brought this upon. Headline news: we got the stock markets up a little bit today after a decline yesterday. It did start off a little bit on the lower end today, and then kind of went up a little bit. There were some comments by Fed member Fisher. Basically, he's one of the very hawkish people out there. Him and like Plosser out of Philadelphia are basically people who think that we should probably, if this data keeps continuing, we should probably raise interest rates sooner than later and keep on ahead of the curve in terms of keeping inflation in check. And right now, the sentiment so far is, if there's worried that maybe if they raise rates too soon, that maybe maybe the economy's not strong enough that maybe it'll kind of pull back too much and contract and have that adverse effect and get back into recession. So that's the overall consensus, but there are a few members out there that are a bit more hawkish and want to see, especially numbers like the ISM services that came out like a 9-year best we've seen come in, and those are things that they're concerned about. We also got some geopolitical concerns today. We had, of course, the Russia basically wanting to retaliate to the extra sanctions that U.S. and Europe are putting on them. There's concerns about increased tension going on with Ukraine. That there's concern that maybe Russia may actually send troops into Ukraine. So those are all concerns there. And another note was Italy GDP's declined, so kind of technically put them back into a recession mode right now. So that kind of came up unexpectedly, saying Italy, which is one of the big five, I believe, for economies in the world. So they're obviously a factor. So let's go ahead and take a look, see what the bond market's doing today, and we've actually went up a bit. So we've kind of fluctuated a little bit, but we're up and down a little bit, but better than where we were yesterday, which is obviously good news, and will give us better pricing. So basically, how you can look at this chart is if you see the chart going upwards, that means rates come down. So that what that means is that there's more. There's buying out there, people are buying, there's more demand, so therefore it's lowering the interest rates for us. All right, so you guys have a wonderful day. We'll see you guys tomorrow. Thanks for watching, and we got a little bit of nice improvement in the interest rate. So the trend right now is it's been interest rate trend been more sideways pattern versus going up or down too much, but at some point it's going to have to break one way or the other. We'll have to be a little bit cautious. So if you are, forecast would be if you want to go short term, probably want to lock in, especially since we've been kind of in this trading range anyways, in case it does break lower and you lose that gain. But if you look at the long term, yeah, you could float. So short term is maybe up to about 15 days considered. All right, folks, you guys have a wonderful day. Thanks for watching again, and we'll see you guys tomorrow.